The hook, you know that feeling when you check your bank account and realize your emergency fund is actually just enough to cover a fancy dinner and a sad cab ride home? Now, imagine looking at the gold bars you bought, thinking they were the ultimate safe haven, and realizing they're doing a fantastic impression of a lead balloon. If you've been watching the charts lately, you might have noticed gold prices have been taking a bit of a tumble, sliding down from those earlier highs. It's enough to make anyone want to hide their wallet under the mattress. But before you panic sell or start shouting at your computer screen, let's talk about why the shiny stuff is looking a little dull. Welcome back to Simple Sense. I'm your host, and today we're demystifying why gold prices have been dropping lately. Now, I know. Finance feels like reading a manual for a blender in a language you don't speak. But gold is one of those topics that pops up every time the economy gets a little spicy. Recently, we've seen prices dip. Some are saying they've fallen over 7% in the last month alone. But is this the end of the world or just a Tuesday in the world of commodities? Let's break down the why without the headache. Why the shiny stuff is losing its sheen. So, why is gold dropping? First off, think of gold as the introvert of the investment world. It likes to hang out by itself, doesn't pay you any interest, and doesn't give you dividends like a cool stock. When the economy is booming or interest rates are high, investors usually dump gold to chase assets that actually pay them to hold them, like high-yield savings accounts or bonds. It's a classic case of FOMO. When the other assets start offering a decent return, gold suddenly feels like a fancy paperweight that just sits there.
Is too strong. The price of gold naturally slides down to find a level where people want to buy again.
Like it's in a light drizzle rather than a hurricane. So what's the takeaway here? If you're a long-term investor, keep in mind that gold is, and always has been, a cyclical asset. It's not a get-rich-quick scheme. It's more like a hedge, a little insurance policy against the chaos of the world. Even with these recent drops, it's not necessarily a sign that gold is dead. It's just the market breathing. The biggest mistake you can make is treating your long-term plan like a reactive, sweaty palm day trader. Keep your head on, remember why you're investing in the first place, and hey, maybe put that wallet back on the desk instead of under the mattress. Thanks for hanging out with us, and we'll see you in the next one.